Hi, I'm Lorna Illingsworth, an independent financial advisor for Protection Investment Southampton. Today we're going to talk about capital gains tax. Capital gains tax is a tax you pay when you make a profit from selling something you own that's increased in value. It's not about the total sale price, it's the gain that's taxed. You might pay capital gains tax when you sell things like a second home, an inherited property, investment funds, shares, a business, or even valuable assets such as jewellery, art, or antiques. Everyone in the UK has an annual capital gains tax allowance. For the 2025-2026 tax year, that's £3,000 per person. If your total gains stay below that, you don't pay any capital gains tax. If you're a basic rate taxpayer, you'll pay 18% on gains above that amount. For higher rate taxpayers, the rate increases to 24%. Capital gains tax generally applies to assets you've owned for at least a year. You'll pay tax on the profit made when selling that asset, anything above your £3,000 annual allowance. If you jointly own an asset with your spouse or civil partner, you can combine your allowances, meaning you could make up to £6,000 in gains before paying capital gains tax. Spouses can also transfer assets between each other to help manage their tax liabilities. Just remember, if an asset is sold later, capital gains tax is calculated based on how long you both have owned it, not just since it was transferred. If your gain comes from selling most types of assets, you'll report it in your annual self-assessment tax return. If it's from selling a second property, however, you must report and pay your capital gains tax within 60 days of completion. If you inherit an asset, you don't pay capital gains tax right away, only when you sell it. The gain is worked out based on the difference between the property's value when you inherited it and the sale price. If you gift assets, the capital gains tax rules depend on who you're gifting them to. For example, gifts to charities, spouses, or civil partners are usually exempt, but gifts to others may still trigger a capital gains tax liability. Some assets are completely exempt from capital gains tax. These include cash, ISAs, UK government bonds, winnings from gambling or the lottery, personal cars, and gifts to registered UK charities. In the current tax year 2025-2026, there is a capital gains tax exemption of £3,000 or £6,000 for couples if you own the asset jointly. This allowance resets every tax year and it can't be carried forward. So if you don't use it, you lose it. There are some reliefs available for capital gains tax. Business asset disposal relief, previously known as entrepreneur's relief, is designed for people selling a business. It offers a reduced capital gains tax rate, currently 14% from April 25 and rising to 18% in April 2026. To qualify, you must own at least 5% of the business, be an employee or an officer, and the business must be actively traded. Principal private residence relief. This applies to your main home, meaning you usually won't pay capital gains tax when you sell it, provided you've lived there throughout your ownership. Even if you've moved out, there's a 9-month exemption period known as the final period exemption. There's also investors relief, which offers a reduced capital gains tax rate of 10% for higher rate taxpayers on qualifying unlisted shares held for at least 3 years. This is capped at £1 million over your lifetime. Generally speaking, you don't pay capital gains tax when selling your main home, gifting to your spouse or civil partner, donating to charity, or selling personal use items like your car. You also won't pay capital gains tax on ISAs, premium bonds, pensions, or life insurance policy proceeds. If you're worried about capital gains tax, please call us on 02380 668 407 or visit our website.